traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York on Thursday, the 24th day of October, 2013, and this is the daily report for gold and silver. We have moderately higher pricing across the board in the precious metals markets. We have Dow Jones Industrial that is a runaway train and a weaker dollar today. First to gold, currently trading up approximately $13 on the day. 13.53 is a high, currently at 13.46 with 13.33 as the low. And as I said, puts it up about $13. We'll talk about our current trade in gold in just a moment. Silver also trading higher, actually up almost 0.75%, 22.71 current print on the screen. High is $23, low $22.53. And of course, we entered positions in both gold and silver yesterday. Our position in silver put us long at approximately 22.60. So just below this area, that's what this cyan line is. Stop should currently be right now at or below 21.84. First topic I want to talk about, of course, is our trades. We did issue a special trade alert yesterday. For those that took the call, you're in at roughly 13.32, 13.33. Market's now trading at 13.47. And we noticed some unique characteristics in the market. Let's go ahead and blow this up a little bit so we can kind of spend a moment with this 720-minute chart, standard candlestick format. Our stop right now is sitting just below 1309, and the rationale behind it is what we wanted to do was to really keep ourselves protected in case we see any new lows come into the market. But this market has been genuinely trending higher in a fashion that I actually like, because what we have seen is a market can be best characterized as a acceleration followed by a sideways or consolidating market for a short time. That's then followed by price ascent or acceleration, congestion, spike, congestion, and then spike. Therefore, when we saw this market beginning to build the base and we had made the decision that we wanted to enter the market, as you recall, I was really looking for a dip to enter the market. On some types of breakouts, you simply don't get the dips. The market just keeps running with higher highs and higher lows really on a daily basis. But with this type of market, we entered yesterday when the market was a little bit soft, I think down $7 or $8. Now that it's up $10 or $12, we have a little bit behind our belt. Now, we did run into some resistance, and 53 was the high today. When we take a look at a couple of different areas that we're going to want to overcome, I draw your attention to this top right in here and how it pretty much matches with this top. But to get a real idea of real resistance areas, we'll want to pull up a different chart. Now, really, the first chart that I want to look at to plot different resistance areas should we see this market continue to rise is this half-a-day Japanese average chart. And we've added two fib retracements, one that covers the entire breadth of the rally, 1181, 1433 to 1435. The second one begins at 1433.35 to 1247. So we have two different fib relationships, and we're really looking to see what kind of harmonics we can find. The first thing that we see is this 38% and 50%, 1340, 1335. And that's the area that we have just really breached at this point. And the market, of course, is trading at 46. So we have a comfortable margin in terms of where the market is sitting. And so my sense is 35 to 40 right now should actually be support. Let's go ahead and use standard candlesticks for this so we get really solid levels of the extreme highs, and also when the market consolidates and where the market consolidates, even more importantly. Because when we do that, you can see that this band here, 35 to 40, is right in the area in which it had a small little corrective action the other day. And so that seems to be something that is giving us some powerful information. So as I look at this chart, we've got strong support right now, 35 to 40. The market should be able to hold that particular area if we're going to see it continue on its upward momentum. Now, what are the next real levels that we need to take out? Well, there's a couple of ways that we want to look at it. We've had the utter breakout, and there's yet another much larger resistance line that we'll need to take out, and that won't happen till about, 1373 to 75. Here we have a 23% retracement. That's the retracement from this large move down. That takes us to 1373. A 38% retracement of this corrective action here is 1362. So we have a $9 range in terms of a fib harmonic between 62 and 73, and that's right in here. So my sense is that although we hit a high of 53, and we'll look to see where that might have come from, the most important thing to really gather right now is that our next real level of resistance won't come in till about 62 to roughly 1373. Now, to get a really strong sense of where this current resistance is coming from, because it's definitely not Fibonacci based, if we go back to the first rally, what we're calling our ABC, and this is all part of wave 4, 1, 2, 3, ABC, we look at this top. This top comes in, line that up as straight as I can. That top comes in roughly at 1349 to 1350 right here. And so that is what we are seeing in terms of where the market is stalled and kind of backfilled a little bit, is really based upon this particular top. So this is the rally off of 1181, takes us to about 1250, then it corrects and then moves to the 1435. So that's what we're seeing right here. Looking at a weekly chart, continuous contract COMEX gold. I've got a lot of different fib retracements, different time cycles, but I want to draw your attention to this particular band, 50% 1330, 23% 1329, shorter term 50% 1340. Pretty much as close as you're going to see in terms of a strong harmonics here. This particular area is where we are trading above. That to me bodes very, very well. Now, in terms of this chart, the 76% retracement, that's above the last resistance area we looked at 1373, is at 1389. But what we really want to take a look at is this longer term resistance. And I'm going to try and line it up. It's not lined up perfectly, but you get the idea. This is where the market failed to break through, and that's what had us determine that we were still, even though we have a bullish rally going on, it's a bullish rally in a bear market. Market comes back down, tests 1250, and is well above this first band right in here. But it really needs to, if it's going to continue to rally, it's going to break through this particular resistance area. We have identified this resistance area at roughly 1370 where it would actually cross, and we are coming closer and closer to that particular price point. My sense is we should have really no issues up till then, and I would look for higher pricing. It might not be consecutive, it might not be continuous, but I do believe that the market will continue to have some sort of sustained rally based upon the fact that investors and traders are getting back into gold now that the current belief is that there won't be any tapering, which has been our belief for quite some time. Last chart we're going to look at on today's show in gold is our 3-day chart. This has our current bear count, and the reason for bringing that up is to kind of stand back. This is the most current rally that we're looking at right in here. And when we consider the kind of price drop that we witnessed as this market came down from 1800 to 1181, and the fact that it has moved up, it has moved up to a defined point, that defined point being the 38% retracement. And that retracement is from this entire span. In other words, from the market going from 700 to 1900, comes back down 61%. This is a 50%, and that is just at around 1316. So we're well above that. And our next real resistance level on a major sense, if it will take out the current resistance level that we pegged at 1373, is going to be based upon the following. Assuming that this market does move back into bullish territory, breaks through this line, the next real level that it's going to have to take out is that 1435, and that's this former top or the top of 4. Now, if the market in fact has the ability to breach this high, it will have us really ponder and pose the following assumption. And that assumption that we'll pose is, have we moved from a bear market into a bull market? Because as it sits right now, we could easily, and even though I'm a bear, a bull, this is quite possible. We could see this market move in this way. It comes down, we get this little spike, and then it continues down. Because we have not gotten any technical confirmation and will not get technical confirmation until we breach this upper level resistance. But traders, we are getting close to it right now. So we'll have to see how it reacts. If it does break through there, the question is, will it be able to take out that 1435? Now, as far as silver goes, my personal sense right now is that what we have been typically seeing when these markets run, when the metals run, is that silver tends to outperform gold in terms of percentage gains and outperform gold in terms of percentage drawdowns when the market's correcting. We're not quite seeing that right now, and if anything, gold is absolutely leading the way. It's been the percentage gainer when the market's been moving up. I do believe that we'll see higher pricing as long as gold continues to move up. 2250, call it, that's going to be our new target or level of support. It is the tops of these candles right in here. Market has quite succinctly, with force, moved through that point, and our next real level of resistance doesn't really come in till about 2347. Now, we did see the market move up, and if actually hit a high of 23 and back off, you can see that on this weekly chart. But I don't really look at that as defined or superlative resistance. I really think that that resistance level will come into play at 2350. The other thing that you can see on this chart is that just in the same way, in terms of a shorter term resistance line, these are just simply drawn from the highs of these candles. There's no doubt, and that is that we have had a clear and defined breakout in both gold and silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Bye-bye.